Hi, welcome back to the channel. Now, before I walk through all of the key charts and the data that you all tune in for, it's been an incredible few weeks since our last video. The market has gone straight into rocket ship mode, and as expected, everything has continued to resolve to the upside, and I do hope that my work over the last few months on my social media has helped in some way. Now, there continues to be some massive upside moves, and it's now starting to take shape in a lot of the beaten up areas of the market, as well as the continued flight to safety in mega cap tech. And as always this week, I'm going to walk through a high level broader market analysis with some key charts and some data and ETFs, of course, with lots of stocks that you can add to your watch lists. Now, there are little signs of rotation in the market, so I will be covering that too. So I think you'll probably find a lot of value from my work, and hopefully the Scottish accent isn't too difficult to understand. Now, everybody's asking me how far can this market upside go. Of course, I have some charts for that prepared this week. On one hand, we still have the perma bears screaming that everybody's an idiot for buying stocks, and on the other hand, we've got a lot of the perma bulls screaming that the market bottomed in October and to expect all-time highs by the end of the year. Now, just to clarify again, I'm neither a perma bull or a perma bear. I'm very open to all outcomes. I simply analyse the data as it comes in, but managing risk is always priority number one. Now, investor sentiment is continuing to show extreme greed out there. So I think the message to say is congrats everybody that has been buying stocks. And with this month's analysis, I'll do my best to filter out a lot of the noise and give some context via my charts. Now, for disclosure, myself or my clients may hold positions in some of the names mentioned, but I have highlighted those disclosures on the charts. If you're new to the channel, I like to use a combination of technicals and fundamentals, and I'm told that I'm very good at removing a lot of the confirmation biases from my charts. Many of you have asked for updates to some of the charts and the names that I've been covering on the channel over the last couple of months, so I will give some updates to some of those charts too. And as most of you know, I do not use the magical hindsight indicator. I timestamp all of my work, which is massively important for the field in which I work. I'm not a short-term day trader looking for little 20-cent moves. I'm looking for structural trends in the market that will last weeks to months. I think that will become very, very clear with my work. My work is really for everyone, everyday investors, traders, options folks, financial advisors, money managers. I'm told my charts are among the very best in the business, so hopefully they make sense, and if they don't make sense, let me know in the comments and I'll try to give some context. But to give myself a little bit of credibility for those of you that are new, my work is well known in the professional world for my ability to highlight the big risk on, risk off turning points, and like I said before, my work is all time stamped. I'm not one of those analysts that make broad market calls before they eventually play out 6, 12, 24 months later. Very few go on the record with their work, and I'm one of them. But some of our recent time-stamped calls, we could go back to the crash just over a year ago, the bear market rally last June, the rally top in August, the market bottom in October, which was of course a massive one, and then of course the rotation back into tech this year, and we could go all the way back to the crash of 2020 where I got our clients defensive ahead of that as well. So I do have a track record of being mostly correct, which helps in this field. So if you do find some value, please do like, share and subscribe on YouTube, and feel free to share and follow on Twitter as well. But please pause the video, make sure you're comfortable with that very important disclaimer before watching any further. But we have recently partnered with TradingView, technical analysis software providers. They are perfect, incredibly cost effective if you are looking for very clean technical analysis software. But to be clear, this is not for access to our client work. This is purely for technical analysis software. There is a separate link for our premium work in the description, so feel free to check that out. But let's just get into the charts and let's just see what the market's telling us. But let's start, I think, instead of going into the S&P 500, I think that the first place to start is the narrative that it's only 5 stocks that are driving the gains of the market this year. Now, this is a data table for the equally weighted sectors in the S&P 500, and I've benchmarked this against the lows from October last year. And as you can see, it's not just 5 stocks that have been driving performance this year. This has been a broad-based rally. Of course, we understand the likes of Nvidia, Meta, etc. have been driving massive gains on an individual basis. But the way that I learned it, and the best analogy that I've heard regarding the market, is your best players are supposed to score the most points. So the narrative that it's only 5 stocks that are driving performance in the market this year is simply not true. This is an idea that is put forward by a lot of the financial media clown shows, as I like to call them. These are individuals that do not count, that do not do the hard yards when it comes to analysing data and the market. But the S&P 500, as far as I'm concerned, is very, very straightforward at the moment. We have further expansion of breadth. The percentage of stocks trading above their 200-day simple moving average continues to expand. We now have 70% of stocks above their 200-day moving average, and we are now just 6% away from all-time highs. At this point, I would be very, very surprised if we didn't go and at least retest those former highs. We can see with the longer term chart, as you can see, the Fibonacci levels here have a lot of merit for my work, and we have reclaimed big levels here. This 44.20 level that I've been highlighting over the last couple of months, we have got ahead of it, and the narrative that we are about to capitulate and see despair in the market, like the textbooks tell us that we're going to see, I'm just not seeing that evidence at the moment. I just posted this chart to Twitter earlier on today. The market rebounded from its 200-week moving average, and it's been going up ever since. But central to our current bullish thesis is the US dollar. Again, for those of you that have followed me and my work over the last few years, you'll know that the US dollar is a big part of my work. It was the biggest factor in calling the market bottom in October. The inverse correlation is still there. The US dollar is doing a free dive at the moment, and it's just falling away. And I think if the US dollar continues to weaken, I think it's very reasonable to expect the S&P 500 to continue to move higher. Of course, like every professional analyst that uses technical analysis and studies price, we obviously have to be aware of what happens when we eventually get to these all-time high levels. You know, it's reasonable to expect a little bit of digestion, but I like to use charts that have a look at value and growth, and the S&P 500 value index is now going out at new closing all-time highs. That is not a bearish development for the market, despite what some may have you believe. But what I would say is, as I record this analysis on Friday, there are still a couple of hours left in the market. Everybody knows the market has been on a rocket ship over the last few weeks. It would surprise me if there's not some kind of digestion of gains going into the close. But again, I think that would be very perfectly normal. But some of the charts that I am presenting today might have a little bit of a difference by the time the market shuts. But the NYSE composite, again, is still flirting with this 16,000 level. I would like to see this break out and get some follow through to really give us conviction that we are going to see a further broad-based market rally. The Dow Jones Industrial Average is still 7.5% away from all-time highs. We've got earnings season kicking into gear. JP Morgan have reported today. That's been quite volatile intraday. So I think for the Dow, I think if the Dow can get above these levels, then again, that would be a bullish development for the market. But we are seeing it today with the triple Qs, which, as we can see, have broken out above those levels dating back to February and March last year. So I am still working on a thesis that the tech space is still looking to move higher. Yes, I would expect probably a retest of this level, a little bit of digestion of gains as I mentioned a moment ago. But by and large, that this isn't a bearish development for the market at the moment. We can see it with the small caps, which have been on a rocket ship over the last week. A lot of those small, crappy companies have just absolutely gone off into space. But again, I'd be looking for this to follow through and probably test that 200 level. But the one chart snapshot of the market again continues to just show it very, very clearly. We've got new 13-month closing highs. We've got 9-month closing highs in the S&P again, and it looks like, again, new closing highs in the Russell 2000. Add in, it's not just the US markets. We're seeing the same thing with stocks across the world. Fresh 15-month highs this week for the All Country World Index, which still has a very strong correlation with the S&P 500. We've got the communications sector again continuing to make new highs. We've got the financials, which everybody told us that we were to expect a financial crisis, a banking collapse because of a few of the small regional banks. We're not currently seeing that. In fact, the regional banks are potentially setting up to break out higher. For disclosure, we made a bottom call on the regional banks on the 5th of May, which was down here, and we are working on a thesis that if the regional banks can get above this $45 level, then I think the small regional banks that everybody told us were about to collapse, I think they start to really move higher. But we can also see it with the big banks. Of course, JP Morgan reported earnings today. We've got HSBC. Again, these are breaking out to fresh highs. So again, if these big juggernaut banks are above these levels, then I think financials are probably fine. And I hate to break it to you, if you are bearish on banks, if you're bearish on the market, if financials are holding up, I don't really see a case that we see a bit of a collapse. Now, semiconductors are a big one at the moment. I have been covering semiconductors for quite a while. Potentially semiconductors are looking to break out to new all-time highs. There is a little bit of chop today, but we have already broken out of a 20-year base on a relative basis to the S&P 500. So it will be very, very interesting to see what happens over the next few weeks with the likes of Nvidia, AMD, etc., which those charts I will be covering in just a few moments. But if you are still here, it probably tells me that you're getting a lot of value from my analysis. So please do hit the like button and like, share, subscribe, all the good stuff. It really does make a difference, and it would be massively, massively appreciated. But this is still the chart that I'm working with on Nvidia. Now, for disclosure, we made a bottom call on Nvidia last year, and it's been working very, very well. I have recently sold my position in Nvidia. I told the world that when it was around $400. Thanks very much, Mr. Nvidia. Move on. But we are still working with our clients, and we are approaching these levels that have been upside objectives here, and to expect a little bit of chop. This is a confluence of Fibonacci levels. Now, whether or not you believe in Fibonacci levels, it doesn't really matter. The big psychological round numbers oftentimes come into play, and I think that $500 level for Nvidia is a level where you could probably expect a little bit of churn and a little bit of chop. MasterCard potentially looking to break out of a 2-year base. This has required a lot of patience if you've been a MasterCard investor, but for us, it's now starting to be appealing, and if it does break out and give us some follow through to the upside, we are working with big upside objectives. Amazon continues to go from strength to strength. Again, it has broken out again this week. We are still working with a further upside target there, around 145, which represents about 10%. As most of you know, I employ systematic process to keep me in trends for longer. I don't like to second guess every little 2-3% move in the market. The market fluctuates, it goes up and down. Trend following processes really just determine that you stay in the trend for as long as possible, and you use something to keep you in the trend for as long as possible. So we are still working with this. It's been working really well since the 10th of April, but 145 is our upside objective there. Same with Apple. A little bit of a pullback this week from an overbought condition. We are still working with upside objectives, but it is starting to show a little bit of weakness, which I think is very, very reasonable considering the trend that it's been on. Microsoft, again, looking to break out. If it can break out above $350, then perhaps Microsoft can take the next leg higher. It has recently just met our upside objectives a few weeks ago. It has been chopping about sideways, but I think with the earnings season that there's potentially a catalyst there. So I think Microsoft is well worth adding to your watch lists for a break above 350, or I should say a significant pullback as well, because nobody knows what the earnings reaction ultimately will be. Now, AMD, I covered this one a few weeks ago, just highlighting that this might be an area where you might want to consider buying AMD. Now, like I said before, the market is in session at the moment, and it does look like a lot of the individual names aligned with the semiconductor space are starting to fall away a little bit. So it'll be very, very interesting to see if by the time the market closes, if the trends are potentially done in the semi space. I like to wait for confirmed closes. Intraday volatility doesn't really excite me too much, so I always wait to see how the market closes. But AMD at the moment, I think this candle doesn't look very, very promising at the moment. But if you have bought it, again, we do still work with trailing stop losses. DraftKings has been monumental. I think congratulations to everybody that's been holding it, buying it, investing in it, dollar cost averaging in it. It's been terrific. It continues to work well for us. It's having a down day at the moment, but I think given the run that it's had, I think that's very, very reasonable. But our process, our stop now is up at just under 28, and ultimately it's making new highs. Pullbacks within uptrends oftentimes offer opportunity. I think that's probably the way to look at DraftKings at the moment. Netflix, again, has broken out, potentially a mini breakout here. We are working with upside targets around $500. I think there's potentially another 11% upside. But again, if there is a big massive decline in Netflix, it's not a big problem for us, because our process has the stop up at 424 now. So it has been a a massive gainer, and like everybody, congratulations to all who own it. Tesla, very similar. One of our open ideas. We are working with upside targets here at $315. Meta again continues to just blast through price target after price target. I don't know if anybody's tried out the Threads thing, the Twitter copycat. It's a lot of nonsense. I don't think anybody's leaving Twitter. I think Twitter is for the cool kids, and we're working with target there at 350, despite I think the Threads platform looking like it's bombing at the moment. Uber potentially looking to break out again. Broken out last month, been working very well, but again looking for a confirmed close there, probably above $46. Now let me just say that over the last few weeks the market has had a massive shift. I think we've seen a lot of the beaten up names, the massive short interest stocks, the crappiest companies on earth are ripping, and I think there's a lot of disbelief, especially from a lot of the fundamental folks, a lot of the economics focused, investors, analysts, etc., are really just watching on in disbelief at the moves that we're seeing in the names like Carvana. Now, when we put this to our clients on the 1st of June on this breakout here, in no way did I expect 300% upside. At most, I think what we were looking for there was maybe a 50% move, 60% move, but the thing has just kept going. It's offered breakout after breakout. It's what I would call stair stepping higher. Now, of course, we've been covering this a while, but this is one of those names that could absolutely collapse on 30 seconds notice. They could put out an offering at any moment. As the chart says, this is the exact chart that our clients are working with and have been working with over the last few weeks. Logical upside target stay around 57, but it's going to be complete lottery whether or not it gets that far. But the reason that this is a name that's appealing is not, of course, for the fundamental reasons. It's for massive short interest, which is something that I like to pay very close attention to. To the other side, we have great companies like INMD that we've been working with, continues to move off the lows. Some of you may have seen a tweet that I put out a few months ago just saying that don't be surprised if this is a $20 billion company by the end of the year. They are growing. It's a really good company, and it's in a massive uptrend. I think a pullback here would be very normal, very logical, but I would be looking for any pullback for that 42 level to hold. Now, to the other side of things, I did say at the start that there are some signs of rotation in the market. Now, over the last few weeks, it's not just been about tech names and growth names and the beaten up crappy names. A lot of my work has actually focused on bringing into focus a lot of the beaten up energy names, the chemicals, the agricultural names, perhaps aligned with commodities. And of course, we've seen some massive moves in the commodity space over the last couple of weeks. And CF Industries has been one of those names, covering this for a potential failed move, failed breakdown, which is something that I look for. We've got low PE ratios, solid 12 months earnings growth. ADM is another one of them. Again, one of our buy low, sell high charts. We've got MDB, again in the package software tech business. It continues to stay in its uptrend. It does look like it's starting to chop and range a little bit. So I think maybe for those of you that are maybe still in it, it's probably starting to get a little bit frustrating. But oftentimes what you can find, especially with with these types of names is it just takes a moving average to catch up to price, and then it acts as some kind of springboard. So perhaps that's something to look for with MDB. Berkshire Hathaway continues to stair step. Again, hopefully this level here holds, but again, if it doesn't, it's no problem. Stop loss is up at 335. Zillow, I covered this one a few weeks ago. It continues to hold its uptrend. It did have a little bit of a wobble here last week, but ultimately this is no accident. These are very specific parameters that we use for our trailing stop losses. Rebound from logical levels, and it continues to make new recent highs. Bitcoin is obviously a big one. I think everybody and their dog is watching the Bitcoin chart at the moment to see if it can finally break out above this 32,000 level. I think it is starting to look quite constructive. I am not personally a buyer of Bitcoin in any way, shape or form. I don't like the volatility that comes with them, but I am very, very happy with call options on names like Mara and Riot. But just to quickly touch on Mara has hit our upside targets here this week. It's obviously done very, very well. If you want to see, explosive moves, and if we bring in the Riot chart here for a second, in order to get these types of numbers, 360%, nearly 700%. Now, Riot and Mara are the two obvious candidates. There's a few other names that are aligned that I could go into, but in order to get these massive numbers, you need Bitcoin to break out. I think most understand that and accept it. So whatever happens with Bitcoin over the weekend, I suspect there will be a movement in Bitcoin over the weekend. We'll need to see, but this probably goes back to the likes of Carvana. It's not that we think these are great companies. It just means that you can express a bullish thesis, and you can use Riot, Mara as your vehicle to express a bullish thesis, and you can do that by defining the risk by using risk-defined call options. I think that's the smartest way to play the crypto space on a personal level. But we also have names like Block, again breaking out. This is one of our premium charts from last weekend. It's broken out this week. We are working with a target there of around $90. We have XLI, the industrial space, again threatening to break out. Cloud computing ETF looking like it is potentially breaking out today. And we've got good old Cathy Wood over at ARK, who is really sticking it to all of her naysayers, and they are breaking out all over the place. The ARK FinTech, the ARKK ETF is also breaking out, and it's not just on an absolute basis. We're seeing on a relative basis as well. So I hope you've had a lot of value from my work. Please do like, share and subscribe on YouTube, and feel free to follow on Twitter as well. But if you are wondering who I am and what it is I do, I run honeystocks.com. We provide memberships for all of our premium work, which is our premium weekend analysis. We provide access to all of our high conviction investment ideas, all of our weekend ideas as well. Also our halftime midweek report, which we provide every single Wednesday. We also provide access to a wonderful community, access to all of our chart books, which covers stocks, ETFs and commodities. And also, if you are somebody that is perhaps a little bit newer to the game, want to learn a bit more about technical analysis, and are maybe sick of hunting around all the YouTube channels and videos for little tips here and there, I've built out a very comprehensive technical analysis program. I'm told it's one of the very best out there, and we also include that with all of our memberships. But just to quickly show you what our premium work looks like, This is our high conviction ideas for Tesla. This went out just a few months ago. It's been working very, very well. We have Tesla again at the start of the year, was a massive gainer. That's the idea that went out for Meta, which I covered that chart just a few moments ago. Amazon has been a massive gainer recently, again Apple as well. But I'm very, very unique in what I do, because on our website I log for complete transparency all of our high conviction ideas that have ever gone out to our clients and members over the last 5 years. There's not any penny stocks, there's not any pump and dumps. It's all high quality names that I believe are about to start to move and perhaps trend. But I've done this over the course of the last 5 years. So feel free to go and check out whether the names that we like to recommend are the names that you like to buy. But my work is generally a good fit for those of you that have a mid-term approach. If you are perhaps just sick of losing at day trading and you're being chopped about, maybe you're looking to just build some kind of systematic process and want to be part of a community. Maybe you're too busy with work, life, family, business, and you just don't have the time. Again, my work might be a good fit. And maybe for those of you that are professionals, money managers, etc., if you just want to have a different perspective and access to a chartist on a daily basis, then again, my platform provides you direct access to me every single day. So feel free to go and check out our options. But if you have stuck here to the very end, thank you very much for watching. Best of luck in the markets, and I'll be back on my YouTube channel in a few weeks. Thanks as always.